Thanks, John. And I will hook straight into this, ladies and gentlemen. So John's given us an excellent overview there. I want to now sort of drive us right into the here and now, if that's okay, because we are in extraordinarily difficult times, and these times were, quite frankly, thrust upon us. So no one saw COVID-19 coming. It has been brutal and is brutal, breathtaking, and the devastation has really shocked us all. You can also interpret from that, regrettably, there's no marker in history. There's no guide that we can look to. It's deeper and it's tougher than the GFC, and you've really got to go right back to the Great Depression. And as the headlines shout out at us, there's 2.7 million Aussies that are either jobless or earning less money, and 2/3 of businesses have already taken a hit to revenue. And I've got to tell you, that headline that you see in front of you now is a month old. So my reading of those two headlines is we got to dig in for the long haul. This is not going to be easy, and we really have to think about two things. And so I'm breaking our session down, or this part of the session down this afternoon, into both survival and revival. And you can read into that survival is the here and now. That is the crisis we find ourselves in. But when will revival come? And we don't know. But let's assume 6 months from now, we're in a better state in terms of lockdowns they're relaxing the lockdown rules, and we're starting to see some trade come back in. So we're going to focus on survival and revival. And in my view, our greatest weapon to be able to survive or beat this COVID-19 crisis is capital and access to capital and careful manage of our cash flow. I would ask if you would just indulge me for a moment and have a look at the visual in front of you, the image on the screen, and just think of it this way. We are driving this car, we're the business owner, we're driving the car, it's a muddy road, we're driving at a reasonable pace. It might well be a bit of a windy road. The risks are extremely high. There are hazards everywhere and our visibility is poor. And why do I share it with you? And the reason for that is that's how it feels right now for us in business. But just reflect for a minute. Ask yourself the question, what about if I pause? What about if I pull over to the side of the road and I take the time to actually clean that windscreen, get rid of all the mud and resume my journey? And that's what we're all advocating right now. We have to be planning. We have to be prepared for what's coming our way and what we're confronting right now. The hazards haven't gone away. The risks haven't gone away, but we have some visibility, or better visibility, and we certainly have better control than we did have. And that's how I'd like to frame it up. So although it feels like we've been hit over the head with a baseball bat, COVID-19 will come and go, and business will live on. So the better prepared we are day one, the better our chances longer term. So I want to focus a little bit today on what we can control. And I think that is extremely important because there's an awful lot we can't control, and there's a barrage of information coming our way. From that, we'll look at what we must manage and what are the decisions that we need to make. Okay, cash flow, obviously number one, really, really important now that we are focused on our cash flow. And we're going to have a look at just what that means. And in my opinion, every business owner or every business out there right now needs a cash flow forecast. So this is where we pulled over to the side of the road and we cleaned the screen. What does our cash flow look like today, next week, next month, 3 months, and 6 months from now? And it's really a 3-step process that we work through to achieve that. We have our sales plan quite clearly. So in other words, we look into the future, we say to ourselves, what is our sales revenue going to look like? And the profile of that for a lot of businesses right now is that it's either falling off a cliff or at best it's subdued. We can put into our cash flow forecasts our known expenses, come up with our profit. But as John rightly pointed out before, our profit and our cash are two different things. So I like to, what we do as the third step of the process is we convert that profit plan into cash flow. And the difference between the two comes down to a single word, and that single word is timing. So the way I like to look at cash flow is it's a bit like opening the safe, sticking your head inside and seeing exactly how much cash you have in there at any point in time. And it's the money that we can use to obviously invest in our business. So cash flow forecast is not new. We're either all doing it or we're all very familiar with it, but there is a bit of a twist. I'm suggesting in this environment that we need actually two cash flow forecasts or potentially one or the other. But what I am suggesting is if your business is in hibernation or has seriously been impacted, then I would recommend that you put together a rolling 13-week weekly cash flow. So basically quarterly, and you can then look at that cash flow week in, week out. Other businesses that may not have been impacted as much, perhaps it's an essential service or a business that just isn't feeling the impact. In fact, there's some businesses out there, as you're well aware, that would be going very, very well at the moment. You ought to be sticking to your 12-month or your 2-year monthly cash flow. But I would advocate that we must be looking at this right now, because what we're going to do is we're going to look at that cash flow, look at the number of weeks cash we have available, and be able to quickly figure out when do we run out of money. And when we run out of money, we've got a loss or we've got a deficit. And there's only 3 things you can do when you've got a loss in your business. There's only 3 ways you can cover it. You can either erode your assets, raid your own piggy bank, or borrow more money. So it's in absolutely all of our interests to have as much cash as we can in our business, especially now, because what we're trying to do is build a war chest to get us through this. And I would also suggest to you that the number one key performance indicator every business in this survival phase ought to focus on is, quite frankly, how many weeks cash have I got available? And it's not a difficult calculation. We just look at how much cash have I got, what is my overdraft in terms of my limit, what's my average weekly net cash flow, and by way of simple example, if I have $30,000 cash, I've got a $50,000 overdraft and an average weekly net cash flow of $10,000, I have 8 weeks of cash available. Pretty straightforward, and I'll share with you in a minute that we've created some workbooks that allow you to calculate this pretty quickly. It's a free resource. But whilst it is straightforward, the point I want to make is, what if I don't like that picture? What if I see 8 weeks of cash available and then I run out? Is there and are there actions that I can take today that can stretch that 8 weeks to 9, 10, 11 or beyond? And there certainly are. And it all comes down to good cash flow management. In front of you is it's really just a snapshot or a screenshot, ladies and gentlemen, of a workbook that we have created, which is a calculator on a weekly basis. There's your cash flow, and ignore the data. This is for illustration purposes. But what I am sharing with you is we've got to have these tools at our disposal so that we can take the action that is necessary. And this will tell us week in, week out, what is our net cash flow, and obviously what is my cumulative line of credit. If I'm using an overdraft or a short-term funding facility and continuing to draw on it, we can see how deep the hole gets for ourselves. These are available, and that snapshot there is just that. It's just a snapshot, but these are very comprehensive workbooks, and they allow you to answer these questions. How much funding do I need? What type of funding? Short-term, long-term? How can I repay it? When will I repay it? and what can I do to reduce the cash requirement? Because frankly, you could be sitting there with your team or with your advisors, and you could be brainstorming using the workbooks to figure out what action you can take and see the implications of those management decisions. So they are free. I'll put this slide up at the end anyway, but that's where you can access them. They are, as I said, they're a free tool for you. I started the conversation with you this afternoon to say this is very clearly in two phases. One is survival and one is revival. And I also said to you that they are two very different beasts. What I would like you to read into that is, in this survival phase, all of our actions are to build that cash war chest so that we can use it when we move into the revival phase. How do we do that? And here's just some of the examples of the things that you can do. Now, the first thing you see there is drive sales where possible, but I also put a word in there, and the word is pivot. And the wonderful thing about SMEs and business owners right across this country is the entrepreneurial spirit. And there are businesses that have been brought to their knees that are now generating revenue in a whole host of ways that they never thought would be the case. And that has been driven off the back of absolute survival mode. 56%, according to a very recent survey by 99 Designs, 56% of business owners in Australia have already pivoted their business. You have some control over this. You have to think creatively, and you have to identify anything you can do to get sales into that bucket that ultimately is going to end up in our cash flow. The other three symbols or icons that you see in front of you are basically strong helping hands from the government. And I'm not going to go through the devil of the detail of all this, but I would make the observation that if you want to build that war chest, that is exactly why the government has put these things in place. They want and need for us to stay in business and the economy to come out the other side of this. So get across all the detail. And when I say across the detail, the level of detail is frankly immense. So if you're finding that you can't deal with the daily fire extinguisher of information coming straight at you, then figure out a way to do it. Either get work with your professional advisors or assign someone in your business and ask them to just scour everything that's available to you, because there's some fairly interesting things. I mean, even at a very small level, some of the local governments are offering $750 grants just to pay your electricity bill. Now, if that just slipped you by, then you miss out. Now, it might not be a game changer, but it's an example that there is a huge amount of effort going in at a government level to keep you in business. And probably the greatest initiative of the lot is, quite frankly, the JobKeeper program that the government has put in place, which is awesome in that they're paying the payroll for you, you're retaining your best staff, which is so critically important. But more, or just as importantly, is if you're not paying because the government is, then guess what? That money's not leaving your bank account. You are building that war chest. Another way to build it is through the ATO cash flow boost, the income tax instalments. If you are paying income tax instalments, and one of the clients I was dealing with this week pays $50,000 every quarter, they have been able to defer that for 6 months. There's $100,000 that's not leaving their account. Very, very important. And then at the end of 6 months, if the business is still in quite difficult condition, they can apply for a low installment repayment plan, low interest rate repayment plan. Similarly, you can get a withholding tax credit. And I mentioned to you before about the cash flow forecast and looking into the future and seeing when we run out of money. Well, now's the time to be looking to figure that out. And if you're going to need funding, then one of the schemes available to you is the SME guarantee loan scheme, of which they've had over $1 billion in approvals already, which will tell you a little bit about what John shared about the depth of difficulty that SMEs are experiencing in this environment right now. I have an image of a runway, and I use the term cash runway, and I use it for very good reason, and that is that most of the people online, I would imagine, have heard the expression cash burn, and we usually relate that to a new venture that raises capital from the market, has a product they want to take to market and commercialize and monetize, and then the race is on, and either they get to market and commercialize it and succeed, or they run out of cash. Well, I'm using the expression cash runway, ladies and gentlemen, because I'm suggesting let's flip-flop the thinking. Let's not have cash burn, let's have cash runway in this survival environment. And we went through some of the government grants, but there's also things well and truly within your control, the first of which is debtors. And why do I raise this? Because most of us have accounts receivable, or a lot of us do, and in my opinion, there has never been a more forgiving time to go and have a conversation with your debtors about changing your terms. It's something that in normal times, we all feel a little bit uncomfortable about. They've always been on 30 days or 45 days. I don't want to lose them. They're my best customer. Have the conversation now. Again, there's war stories galore about people implementing new terms with the blessing of their debtor. And it's highly likely those new terms will ultimately become permanent. Do it now. This window will close. And when things do start to ramp back up, debtors won't be quite as forgiving. So, we don't need to go through these, but it is a case of do whatever it takes to get paid. And in some cases, a very large Australian franchise group that have introduced credit card payment policy across the board. So they get paid up front, credit card holder pays them and has the benefit of the 45 days interest-free period. They didn't lose out on profit because they passed on the surcharge. So again, just a very good example of some of the things that you can do. And finally, I would say this is an environment to be making the phone your friend. In other words, ringing up all of your stakeholders, not to plead or to ask for help, but to share your story, share with them your expectations, and ask them, is there anything they can do to help you? And I've heard of a number of great examples of lawyers and accountants that have deferred payments for considerable periods of time, a supplier in the jewellery industry that agreed to 6-month terms. So again, the environment's right to be doing this. You could also consider negotiating with your landlord or deferring your payments with your bank, all of these things. So if I take a 6-month holiday on my bank payments because my bank is offering a relief package, that money is not leaving your bank account. You are building that war chest. Same with the landlords and suppliers and anyone else you can get that benefit from. So I would suggest, as part of your survival plan, forecast your cash flow, clean the windscreen, have a look in the future, see where you've got a hole or a deficit, put your funding lines in place, make sure you've got access to that capital, that your business is capitalised, and even to the point that you've got scope to apply that capital to a growth environment, because the good times will come. We feel like we're in the valley of death at the moment, but we're going to get out the other side. So build up the reserves, engage with your professional advisors, and if I just take you back to a moment ago when I said there's so much information, you need to be refining it daily. Well, guess what, ladies and gentlemen? That's today. That's in the last hour. There have been 75 new SME grants launched, and they are for amounts up to $10,000 for businesses with between 2 and I think it's 2 and 100 employees. I might have that wrong, but it's certainly 2 or more. And it's backed by private enterprise, by Salesforce, I think was the company that's got behind it. So that's massive. Get your head around it. It might be something that you can take advantage of. None of us are in survival for any other reason that we want to come out the other side, and that's revival. And revival, this is going to become pretty apparent as we walk through this exercise. I put a lot of emphasis on building up the reserves because I've got to tell you, I think the cash flow crunch is coming in the revival phase. I know that sounds weird. If my sales are starting to climb, I should have more cash. Let's explore it. First of all, the helping hand of government is being withdrawn. The landlord generosity and spirit will disappear. The bank relief packages will have expired. There'll be more regulation and costs will go up. You are going to need every bit of those reserves. You may well find, well, I guess I'd sum it up to you by saying, it's not going to snap back to like the world we're used to. Revival is not normal. This is not the new normal. There's nothing normal about anything we're going through. And when we do need to ramp back up, you know what? If I'm a fashion retailer, for example, and it's 6 months down the track, guess what? We're in a whole new season. Or perhaps I'm a factory and I have to completely retool. Or I'm in hospitality and I can only have 10 people in my restaurant and I have to train my staff and I have to observe very strict hygiene requirements. Or perhaps I'm a wholesaler or whatever the case might be, and my supply chain has changed, or it's broken, or I need new supplies. This is not normal. This is why we clean the windscreen. We've got to be thinking about all these things. How will your trading be affected? My guess is sales will go up off an extremely low base. Margins will be coming down. Costs will be going up. What we don't know is if this goes long enough, buyer behavior will change. And that's really important for everyone on this call now. And it's no surprise when you think back to that headline that 2.6 million Aussies are either out of work or earning less money than they used to. So what we can't figure out is how cautious they're going to be and whether they're going to sit on their hands or whether they're going to go out and start spending again. And we're trying to take a business from first gear to fourth gear, which we can do, but we've got to plan it and plan it well, and it's tough. I shared with you, ladies and gentlemen, that we have those two workbooks in front of you using the 12-month cash flow workbook. I've charted a business with some sample data. I would ask you just to have a quick look at that, and particularly the yellow line and the green line. And what you see is initially our sales are flat and we're okay. Like we've built up our cash reserves, so we're all right. And then guess what? Our sales start to go up and they climb and they climb and climb. But what's extraordinary is that our cash goes down because perhaps I am an asset intensive business and perhaps I do need to buy more stock and you throw out the old stock and get rid of what's not moving and so on and so forth. But I've also got payroll now. I've got lease payments. I've got my staff back. I've got other costs. Look at what's going on with cash. And I would like to put it in these terms and show you an illustration that John and I have created, if you like, and we use all the time in our workshops when we're talking about cash flow. And when I say all the time, I mean pre-COVID, because it's hopefully going to focus the mind and visualize this as a business where it's a seasonal business and sales go up and then we get to Christmas, they peak and we drop over the other side and they start to go down. Think of it this way. If I make a sale today and I collect that sale 30 days later, because I've created a debtor and I collected the sale. So I've got the money in my hand now and I need to use that money to support a higher level of sales. In other words, I've got to buy more stock. I've got to pay my payroll. I've got a higher level of debtors than I had before, and my sales keep going up. I do it again. I collect my debtor. I've got the cash, but that was yesterday's debtor, and now I'm funding tomorrow's. I need more stock. I need to pay my payroll. I need to do all of these things. I've got my overheads. What we see as we climb up with our sales is that we create a whole series of cash gaps. And ladies and gentlemen, the thing about this is it's a really difficult concept to get our head around because it defies common sense. We tend to think the more I sell, the better the business is. But what happens is the opposite occurs when we drop over the peak of our period and our sales go down because I collect yesterday's data, I've got my cash here and I'm buying stock, I'm buying less than I had to. And I continue to do this and I create a series of cash surpluses. What we do know is as we move through this crisis, some economists are telling us that we could have a double dip recession, or if you like, a W-shaped recovery. We hope not. We hope it's a V-shape. But this illustration highlights just the challenge that we have in order to manage our cash. But we do have to give some thought at an individual level. What does recovery look like for your business? Every business is going to be different and there'll be all sorts of different shapes and sizes. Is yours a V, a U, a W, or an L? We don't know, but it is something that we have to get our head around to do our forward planning and our cash flow planning or forecasting. There's a tool I would like to share with you that we use, John and I, in mentoring business owners across the country. And you're seeing the finished product here, but we will often walk into a boardroom with a team of people from an individual business, and we will draw a circle in the middle of the boardroom, and then we'll write the words cash. And then we will ask the people with us to brainstorm and literally let their minds go. In other words, draw out branches and label them with everything in the business that touches their cash flow and start to ask the question, could we do it better? What were we doing 2 years ago? Why have our debtors slipped? How come we've got more shrinkage? What policy changes could we make? Have we got the right product mix? It's just a great brainstorming tool, and I really just want to share it with you today in case it's something that might work for you and your business. John mentioned the cash cycle earlier, and he said, I start with $1 in the bank, I buy some stock, I then sell the stock, so it sits on the shelf for a bunch of time, and then I sell the stock, I create a debtor, and the longer I take, and I collect the debtor and the cash comes home. And John is absolutely right. I like to think of that as a spinning wheel. And I've got to share with you at a concept level, it's one of the best tools that I can use or we can use to focus the minds of business owners, because the faster that spins, the faster you can spin that cycle, the more cash you're going to have in the bank, or the less overdraft you're going to have in the bank. There is a converse to this though, a flip side. The slower it turns, if it moves really slowly, I'm going to define that by 2 words. You're going to have in your business frozen capital. If you let your stock stay any longer than it has to on the shelf, if you assuming you have stock, or you take too long to collect your debtors, then you're doing a disservice to your business and your cash flow because your capital is tied up. And I use the expression turns of days and days of time, and time is money. Now, we're in a virtual workshop, so you can't yell back at me, but if I am standing on a stage talking to a whole lot of business owners, they're going to finish the sentence. And they're going to finish the sentence every time by saying time is money. So draw it up somewhere, keep it front of mind, because it can have a profound impact, not only on your cash flow, but also on your profit and also on your balance sheet, all of which are critically important, as John mentioned. And John's running, I think in about 2 weeks from now, and he might confirm that or otherwise, some online workshops. And whilst he'll be working through break-even analysis, he will also be working through this cash cycle. And he will put up an exercise, and in that exercise, he will be able to demonstrate what 1 day's improvement is worth in stock and debtors for your business. And as part of that process, he'll work through a very He'll work through a series of calculations that you can do that ultimately tell you what the individual single day's value is. He's probably going to get cross at me for sharing this with you because I'm going to give you the shorthand version. We can get the same result and by doing this. So for our debtors, we take whatever credit sales we made and we divide by 365 days in the year, and that will tell me what one single day of debtors is worth. Stock, cost of goods sold, divide by 365. So ladies and gentlemen, let me ask you the question, or let me put it to you in these terms. If one day's improvement in debtors was, say, $10,000, what if I got 10 days? What if this year I'm 10 days slower than last year? So I just started to do what I was doing last year. I will have found $100,000 that will stay in my cash flow or will reduce my overdraft. And the same applies for every single day you can improve your stock management. It is important to go through the version of how we come to this calculation because it's part of the learning exercise. So I'd encourage you to work with John on the online sessions. I did break down today into two parts. I did say to you, build your reserves now. That's survival. And because in my view, you are absolutely going to need them. And that's revival. The cash crunch is coming. I am, however, an optimist. I am a believer that we're going to get out of this. I would urge you to use a cash flow forecasting tool. It doesn't have to be the free ones or the ones that we're making available to you. Do it with your accountant, use Xero, whatever the case might be. But that is a powerful tool to beat the COVID-19 impact, to keep you alive and allow you to prosper. And as I said, I am an optimist. The COVID-19 party will come and go, and the business party will start. It'll evolve, it will endure, build, grow, and succeed if we are willing to do our forward planning. We will come through the valley of death, and although we've been hit over the head with a baseball bat, guess what? COVID-19 is going to disappear, so we get to finish the innings. I wish everyone here, I wish you the best. I hope you stay safe. I hope your business will be working through all those bubbles to the success level. I'm going to leave this slide on the screen just for a moment and pause because I'd like you to be able to take note or screenshot, whatever you want to do, of our details. We are here to help. We're happy to help. And as I said before, especially with regard to the online stuff, you might want to just inquire via John at primeprofitsystem.com.